This is Robert Kraft, and I'm coming to you live on SNN Live, and we're here at the MicroCap Conference 2016 in Philadelphia, Pennsylvania. With me right now is Lawrence Levy from Regency Affiliates, publicly traded company with the symbol RAFI. Lawrence, welcome to SNN Live.
Hi, Robert. It's fabulous to be here, and thank you for having me on your show.
Oh, it's a pleasure to have you on our program. So for our audience, before we get into the nitty-gritty, let's get an overview of Regency Affiliates.
Regency is an OTC traded company which has a strategy of investing in strong cash flow assets with very predictable cash flows with very good credits behind them. To date, we hold 3 assets that I'll be going into detail about. But as a result, our cash flows within Regency are very strong and predictable. We pay a good dividend of 2.5% per annum on the current stock price, and we continue to grow that dividend as our cash flows grow.
So I want to know a little history of the company. How did you guys get started and get to where you're at currently today?
So I came across Regency about 15 years ago. At the time, the company was actually quite distressed. The stock was trading at $1.35. It had debt in default at the holding company. It had a couple of operating companies losing money. But it owned one very valuable asset. It owns 50% through a limited partnership interest of the headquarters building of the Social Security Administration of the U.S. government. So this is a 700 or so thousand square foot building located on just over 34 acres just outside Baltimore in Woodlawn, Maryland, that is occupied by Social Security Administration. I thought that this valuable asset could create value, so I acquired somewhat over 50% of the outstanding stock of Regency. I then worked with our real estate partner, and we managed to sign a new 15-year lease with the United States government on that property. On the back of that, we were able to place a $98.5 million mortgage on the property. That resulted in a distribution to the partners, of which Regency received $41 million in cash. We used that to clean up our balance sheet, pay off the debt, clean up any litigation that the company had outstanding, and then started looking for acquisitions. We subsequently bought a power plant that we own in partnership with Detroit Edison. We are 50-50 partners. This power plant is located in Mobile, Alabama, and has a long-term offtake agreement with Kimberly-Clark for one of their strongest tissue manufacturing mills in the United States. Lastly, more recently, we bought a portfolio of 5 self-storage facilities located around Harrisburg, Pennsylvania. So we have a portfolio of 3 fundamental assets today. The Social Security building, named Security West. Secondly, the power plant with Kimberly-Clark as a customer, which is named Mobile Energy. And lastly, the self-storage facilities located around Harrisburg. Collectively, these assets generate very strong, stable, and diversified cash flow for us that we think offers a tremendous backstop of value for all of our investors, including ourselves.
So what I want to know is what are some of the company's criteria when looking at different assets to add to the portfolio?
We continue to look for assets that have high barriers to entry, very attractive customers, stability in their cash flows, and assets that we believe will generate those cash flows through any economic environment. We continue to own approximately 50% of the common equity of Regency. We've never sold any shares. That has been a good idea because the shares have grown from $1.35 when we invested to over $9 today, generating an IRR of approximately 16% per annum. So overall, we think that these kinds of assets generate good, stable returns in any economic environment, and we will continue to look for other similar assets to build and grow Regency's portfolio.
And what's your background? How did you get into this business?
My background is I grew up in Johannesburg, South Africa, came to the United States for business school and stayed on. I was with Bain and Company for a few years, and then I set up a personal company by the name of Hyde Park Holdings to invest in middle market businesses. Over time, we have tended to focus on infrastructure-orientated assets. For example, we have owned the toll tunnel between Detroit and Windsor, Canada. We have built up a portfolio of airport parking lots and other similar assets. So it's that kind of philosophy that we have brought to Regency affiliates. And we believe, again, that it should generate very strong, stable, and predictable cash flows for Regency over the long term. Certainly in the 2008 financial crisis, our Regency assets held up extremely well and continue to generate strong positive returns for all shareholders.
So from what you can tell me, what are some of the goals and milestones for the company for the rest of 2016 going into 2017?
So our goal is to continue to look for attractive acquisitions. We are not in any rush to consummate them because we want to do sensible and attractive acquisitions, and we will be patient in finding them. Having said that, our objective is to build and grow Regency's asset base and equity value. So we continue to evaluate new investment opportunities, and as soon as we do find one, we do anticipate growing it and investing in it.
And where can our audience go and find more information about the company?
Our website is regencyaffiliates.com, and we would encourage you to read up about our assets, and we are certainly happy to talk with any and all investors.
My name is Robert Kraft, and I'm coming to you live on SNN Live, and we're at the MicroCap Conference 2016 in Philadelphia, Pennsylvania. With me again is Lawrence Levy from Regency Affiliates, publicly traded company with the symbol RAFI. Lawrence, thank you so much.
Thank you, Robert. I appreciate you spending time with us.
Thank